everybody, this is Pookie's Revenge, and today I want to talk about taking profits. We kind of left off on the last one. I guess I just kind of rambled a lot and forgot to explain the three different methods that I use. So that's what this video will be for. So let me kick over to the screen here. Let me also just resize this a little bit just to make sure that you guys can see it. For some reason when I add stuff to my, my recording software, it likes to freak out on me. So sorry about that. All right. So we're here. So there's three different strategies that I personally like to use when it comes to taking profits. And the first one is just simple. You just, when you enter, say whatever criteria you use, you take an entry. That setup or that strategy should give you some predetermined risk range. So in my case, if I'm using engulfing candles, I use, let me just draw this out for you really quick. I'm going to use it'll be a 2-candle series. Okay, so I'll have a red one and a green one, or in my case, a red and a white one on Webull. And all I do is I just make sure that the green one breaks over the top of the red one, and that right there is my entry. And then the lower of these two, as I covered in the last video, that determines where my stop loss goes, my immediate stop loss. It's 1 cent below the low of either of these two's lows, whichever one is lower. So I take the absolute minimum price that the price has been in this range, this time period, and I put my stop loss 1 cent below that, because if it goes below there, it's gone. The reversal is gone. There's no reason to justify being in that trade. So that's my entry, that's my stop loss, and all I do is take this range, this risk range, and I double it, and I add it above where I entered. So 1, 2. All right, and that's it. That's my that's the secret sauce, guys. So the number one strategy that I use to take profits is always going to be just a predetermined take profit level, and that's just some multiple of the risk range in most cases. So as soon as that's hit, no matter what, I just lock in 75% and I move on, right? And then at that point, I've got 25% left. So what do we do with that? Okay, so there's two ways that we can handle those. And while this is going on, let me also just pull this trade over here, because I'll show you guys, like right here, for example. Let me just lock in some profit here, because this strategy I'm about to teach you guys actually just kicked in right here off screen, so sorry about that. All right, so we covered our first take profit, right? And that's when we lock in 75% of the position. That guarantees us a net profit, because we're locking 3/4 of it up here, so the remaining quarter has to go much farther down below the average to lose those profits. So we're locking it in, guaranteeing a net profit. The next and most important item, well, I guess this should be the first and most important item, is always having that 100% stop loss in place at all times on every single trade, right? The purpose and the advantage we're giving ourselves here is having a small risk range. So we sacrifice that if we don't respect our stop loss. So in this case, when the price, we enter, the price moves up, the price moves down, the price moves back up. As soon as we get that higher validated low, and it looks just like this, it'll be maybe like the candles will be a little bit wonky. Maybe it's like that or something like that. It's not always going to be perfectly a V shape like this, but you'll always have at least one candle here that's going to have 2 candles to the left, 2 candles to the right with a higher low, and it's a minimum. Okay, it doesn't have to be just 2 candles. It can be 3, it could be 5, it could be 10. At least 2 candles will validate this low as isolated. Okay, so we don't want anything over here, and we don't want anything over here. We want to clean test this range right here, right there. Okay. And we don't want anything in this space over here. Okay, that identifies this as a low, and then we can understand that we don't want the price to break below that, because that's a lower low. So in this case, we always have a stop loss right below every validated low. So whether it's, right here after entry, you can put your 100% stop loss right here. Price goes up, maybe it comes back, maybe it goes back up. As soon as it validates that higher low, I like to move my stop loss right up there. So in this case, I've got a candle pulling down right here. Now I've got this candle forming. Hasn't broken this low yet. Okay. Oh, what have I done? Sorry. I'm used to using the mirror here. All right, so if this candle and the next candle don't break below the low of this candle, I'll put my stop loss right down here. Okay. And then what that's going to do is it's going to guarantee me a net profit anyway, because it's above my break even, but it's going to get me out of this trade. So actually I only have 25 shares left, so let me just do that real quick. That way I have my quantities are all set. All right, and you can see, I obviously took a slightly different entry here because I was off screen, but look at this strategy that we've been teaching in the homework. Look at how stupidly small this is. Now this one has a negative slope on the moving average, so we would have passed this one. But you know, I'll show you some other examples from this morning. Like this is a beautiful opportunity here if you're using the moving average, but I did enter one that didn't have one. But don't do that. Don't compromise your stuff. All right, so I talked long enough. So we're just waiting to see what this candle does right here. So if this candle can stay above this blue line, essentially, which is the low of this candle, we'll have a higher validated low, and then I'll have a mental stop loss just right underneath this candle right here, right underneath the low. So that's item number 2, and that's always going to be 100% exit for me. The other two are 75% exit, so I sell 75% of the shares that I'm holding at the time. But I'm always going to have that 100% exit on a hard stop loss, and it's going to stay right underneath every validated low that's higher than the one that I entered on. And it's just going to keep going up and up and up. Every time there's a validated higher low, I'm going to move that stop loss up. As soon as there's a lower low, no matter what, as far as if it breaks below the stop loss, I'm out. 100%, no questions asked, no hesitation. Okay? And I'll show you some examples of that here in a second. But I'm really interested in seeing what this one does here, just to show you guys. So for right now, because I'm using a slightly different strategy on this one, my stop loss is right here. It's below this candle. But then this candle right here just validated this guy as the low. So 2 candles to the left, 2 candles to the right. So if I just draw vertical lines here, okay, ignore this one. This guy right here doesn't have competition to the left or to the right. So therefore, it is a higher validated low. So I move my stop loss up right there. As soon as price breaks below this red line, I'm out. No matter what, 100% out. It's not a partial take profit. It's an absolute hard stop. I just cut everything. I don't want to be in the trade at that point. All right, because I want to see higher validated lows. I don't want to see a lower low. Yeah, we'll keep rolling. I don't care if it goes a little bit below. I already made money today. But this is always my number one rule. This is our superpower in the market, is being able to mitigate those losses before they, get bigger than our profits. So I would say that's probably more important than this guy, actually, just having that hard stop in at all times. If you're someone who doesn't have risk tolerance, I do. I have insane risk tolerance. But, for teaching purposes and for showing you guys a strategy and emphasizing the power of risk management, it doesn't make sense to compromise on that. So we'll just stick with what it is. Oops, I accidentally clicked the button in because my finger's fat. Sorry, I'm just trying to see if this will break down so I can show you guys kind of in, quote, real time. It's on a recording. But you guys will see, this is the validated low. It just needs to be respected. Now I could put an order in place and move the order up. I just don't trust it on these low float runners for the day because sometimes the bid and the ask separate, but we'll get into that later. Just know that I like to do all these manually. All right, so this is the one and only 100% exit at all times for me personally. Now, if you're on a smaller account, you're trading like 1 or 2 shares, and you're over here, you might just want to lock that share at that disproportionate risk-reward ratio take profit, and then that way it's just automatically locked in every single time. And then when you get a larger account, when you make consistent contributions, you can grow and grow and grow. Then you can scale in and out and have a little more flexibility over the number of shares you hold. But for right now, if you're just dealing with 1 share and you're not sure what to do here at this take profit, you can always just lock the profit, right? You're still locking in twice the risk. And that stuff compounds really nicely and really frequently, which is why we lock in 75% of it at that nice low safe target, so that we don't have a lot of risk exposure as the price kind of separates from where we entered it, because we just want to get in and get out with the bulk of it with some disproportionate profit. That's the name of the game, and the more mechanically and systematically you can do that, the better off you're going to be. All right, so now I'm going to talk about the 5 candle series, because this is kind of one that I think a lot of people it takes a minute, and once it clicks, it's a beautiful thing. I'm just going to keep checking back on this real quick. There we go. I'm out. No questions asked. No hesitation. I just hit the button as soon as it dropped below my stop loss. Okay? Because this was the higher validated low, the HVL stop loss. Right? So this low couldn't hold. It's just going to sell. There's no point in me being in it, trying to rescue it. I got in a decent price. Now, this was kind of around my average, but I had a pretty big position, so I didn't want to risk it too much on this account. But I'll show you some better examples here in a second. So a 5 candle series is always going to be a 75% take profit for me as well. So there's 2 75% take profits and 1 100% take profit. Okay, I probably should have grouped these differently. Actually, yeah, let me just do that real quick. So I'll just move this down here, and hopefully this will kind of clear some things up so that everyone on the team can understand it. So a 5 candle series is just any sequence of candles whether they're red or green, doesn't matter, right? That has a higher low, to where every candle in the series for 5 or more candles has a higher low on the candle than the candle before it. So in this case, this candle here doesn't count, right? Because we don't know what the candle before it does. This candle here has a higher low than this candle. This candle here has a higher low than this candle. This one has a higher low than this one, and this one has a higher low than this one. This is 5 candles in a row. So this is a 5 candle series. So as soon as this 5th candle closes, and all 5 of these or more have a higher low, I move my stop loss up. And this stop loss is a partial stop loss. This is 75% of my shares. So in theory, I've already locked 75% of them here. So I'm really just selling 75% of what's left. Whichever of these comes first, I like to lock in. This is just a technical bullish impulse. That's all it is. So we're just locking the top of the impulse, or trying to get the top of the impulse, right? Because most of the time, you know, when you see this, you get like a little tiny guy up here. I'll show you what it looks like. You get like one of these guys, and then you get like a massive red candle. And we would have stopped right here in that scenario, and it looks like we know what we're doing. It looks like we're badass because we were able to snipe the top. In reality, all we did is follow a system. So I'll just erase those real quick, and we'll look at some real examples of that here in a second. All right, so this concept should be pretty straightforward, pretty simple. You're just looking at 5 candles with higher lows, and you got 1, 2, 3, 4, 5, and all you got to do is just draw a vertical line, or I'm sorry, a horizontal line, and just count them. Just follow the candles up. So if there's candle down here, that means that the candle didn't have a higher low, right? Makes it pretty simple. So I'm looking at this candle right here. I'll just zoom in so you guys can see this as well, or a little more closely, right? I'll turn off the moving average so you guys don't get confused or any of that stuff. So looking right here, okay, I got a low on this candle. This one's higher, so we can't. It doesn't matter. We're cutting that out. So we're starting with this guy, okay? We look at the next candle. This candle has a higher low than this candle, so we move the stop loss up. This candle has a higher low, so we move this one up. This is candle number 3. Okay, so 1, 2, 3. This candle has a higher low than this one, so we move it up. That's candle number 4. This candle has a higher low than this one, so that's candle number 5. So as soon as this candle right here forms, I'm just going to erase this vertical line. So this is the first candle, second candle, third candle, fourth candle, fifth candle, right? As soon as this one closes, we put that 75% stop loss right below that low, okay? And then for every candle that follows that sequence, we just do the same thing. We just move the stop loss up. So as soon as this one closes, this one opens, we move our stop loss up to this guy. As soon as this guy opens, or I'm sorry, as soon as this guy closes and this guy right here opens, we move our stop loss up, okay? And then as soon as we get candle below here, we execute. We lock in that 75% of our shares. And that way we've essentially just locked the impulse. And you can see here's an inverted hammer. And it looks like we sniped the absolute top like badasses. But in reality, all we did is just let the candles tell us when to, you know, get out, or at least lock a majority of our shares, right? So we don't have to do anything super crazy. We just got to listen to what the chart's telling us. So if I look back here at SNGX, right? I just traded this one for the team. I put the entry and all that in the live stream. And it's just the same strategy I've been teaching. So we just have a 20-period moving average, nothing complicated. Same as what I described in the video on the last episode. Look at how tiny this risk is. All right, it's like 12 cents or something. It's stupidly small. As soon as price broke over, we took an entry, or I took an entry. Stop loss goes right here. So the entry goes above the body of the red candle. Stop loss goes below here. Okay, and it's just the low, whichever price is lower of these two candles. If that's an acceptable range, take an entry. And then we've got a disproportionate 1 to 2 take profit somewhere around here, or 1 to 3, 1 to 4, 1 to 5, whatever your particular preference is. That we automatically lock, remember, 75% of the position one time, okay, at that disproportionate target. But we also have 1 candle here, 2 candles. So the second candle identifies as having a higher low than the candle before. So this is candle 1, 2, 3, 4, 5, right? So at this point, this is now a 5 candle series, and the 5 candle rule is in effect. So we can start to move our stop losses up below these candles. And you can see this red line here is just where I had it from before. All right, so then we had a candle right here, and then all 3 of these are the same price, so they count. If it's equal or higher, we move it up. If it's just the same price, I just don't move the stop loss. But these all just stayed the same price, so they count as higher technically, so it continues the series. And then we get another one, and then another one, and then another one, and then another one. I'm just going to erase this line because the other one's already there. But you guys can see, as soon as the price broke below here, I locked 75% of what I had left. So at this point, if we're walking through the trade, entered, locked in 75% of the shares here. I had 25% of the shares left. And then as soon as we hit this candle right here, I locked 75% more of those shares. And we haven't had a higher validated low here because it's just higher lows. There's no pull down there. So, so right here, however, if we look at this candle, right, if I just draw a line right here, 2 candles to the left, 2 candles to the right have higher lows. So this therefore becomes the higher validated low. And as soon as price breaks below that right there, I'm 100% out. So whatever I had left, I'm out. Okay. So it's 3 steps. So step 1, selling at this disproportionate take profit ratio, sell 75%. Step 2, look for 5 candle series if they occur. They don't always occur, but if they occur, lock 75% more. I lock 75% more each time. And then I do that with a trailing stop loss, essentially a candle trailing stop loss. And then at all times, I look for higher validated lows to move my 100% hard stop. I just move that up and up and up and up. And then as soon as the price comes back down and hits any of these stop losses, they trigger, well, they're mental stops in this case because I'm trading low float garbage. But you can do this on the daily time frame. You can do it on the weekly time frame. It doesn't matter, right? What matters is that you can understand it and have confidence in it. But at all times, if anything violates my stop loss for this particular approach where I don't want to have drawdown and stuff, I'm out. I don't care. So in this case, I think on QURE, I want to say it was. I grabbed one of these guys. I think it was, no, I don't remember which one. I think it was this guy right here or something. I didn't take I don't think we hit the 1 to 2 take profit. So I took this and it didn't have a positive slope on the moving average. So I kind of knew it was higher risk. So I lost like $2 on this trade, but I made $14.50 on this trade. So it doesn't matter. Right. And then right here, you know, we get another opportunity right here. So I'm just going to draw this out because I didn't trade this one. I just want to see what it looks like. That's the wrong tool. Sorry, guys. It's my first day. Right. So we've got all our criteria here. Now this risk is a little bigger. It's 51 cents, but it's okay. We got a positive moving average slope. We've got a tiny red candle. That's all I care about. We break over the body and then we set a 1 to 2 take profit. Well, I do. And then we just extend this out to the future and we hang on, right? So at this point, I'm not really looking for anything unique here. I'm just looking to see if we get 5 candle series either in this box or if we hit this take profit. Okay, so those are my kind of upward action take profits. But what we do have here is a higher validated low, so right here. All right, so what we can see, if I could just move my mouse over that, just pay attention to the vertical line here for the crosshair. If you look at this candle here, 2 candles to the right, 2 candles to the left have a higher validated low. Or I'm sorry, a higher low, so this becomes a higher validated low. And what that does is it takes this risk, this stop range, and it makes it super tiny. So we went from 51 cents down to 13 cents. So we divided our risk by 4. Even though we still stopped out, it's okay. I'm not going to move the target down for this, by the way. I'm just leaving it where it is, but I'm moving the stop loss up to minimize the risk. And in this case, we just happen to have stopped out, right? And then the price just kind of went below. And then right here, we've got another beautiful setup. So maybe we lose 13 cents. Who cares? Per share, right? But then you get another beautiful opportunity like this. Now, moving average has a positive slope when the red candle's body is broken. You can see right here it breaks up, and the moving average has a positive slope. So let's draw it out. Let's see what it looks like. So we've got our entry here. We've got our stop loss right here below this candle, and then we've got a 1 to 2 risk reward right around there. So we lock 75% right there, and then we've got 1, 2, 3, 4, 5. So 5 candles in a row. So then we move the stop loss up right here. Bloop, bloop. Right? And then this is for, I'm sorry, this is the 100% stop loss down here. I'm just going to move this one up. This is a 75% stop loss. So 5, 6, 7, 8, 9, 10, 11. It's still going. So all these candles here have higher lows. So there's no reason for us to have really sold anything other than this initial 75% just to lock in that position and guarantee a net profit. So if we had entered here on this color change above the moving average with a positive slope, we'd be sitting pretty nicely right now, right? So we've locked in 75% right there. We'd have 25% of our position left, and we would be up here somewhere. Or I'm sorry, our stop loss would be up here at this level, not up there. Sorry about that. And let's just extend this over. So we'd still have 25% of the shares left. We would have locked 75% down here. We're looking to lock another 75% here, and we don't have a higher validated low to move this stop loss, this big fat stop loss up, because we haven't got a pullback yet. Okay, so this is a hard stop. These are each 75% stops. I'm sorry, take profits that I implement through stop losses. And so right here, this candle closed, this one opened, therefore this becomes the stop loss. I moved it up a little bit early, but hopefully you guys understand that. So hopefully this all makes sense. Let me just run through one more time real quick. So using my very, very simple strategy that I'm teaching, and you guys don't have to use this strategy, as Snowflake said, it whatever works for you and whatever you can understand the best and get the most value from is what's going to work for you. You know, I can give you all the rules in the world. If you can't follow them, or if it doesn't make sense to you, you're not going to be able to have confidence in it, and you're going to struggle and you're going to lose. So it could be as simple as drawing one line and just trading small engulfs off of that, or trading, you know, increasing volume off of that, whatever your strategy is, it doesn't matter. MA cross-ups, all that good stuff. So if I'm using my the homework strategy that I'm teaching, I'm going to use a 20-period moving average. I'm going to look for a tiny red candle near or just above that. Then I'm going to look for a color change with a positive MA slope. So a positive moving average slope. I want this line moving up. Okay. That is where I look for entry. I put my stop loss down below the lower of these candles that are involved in this color change, right? That identifies my risk range. I multiply that and add it above my entry for my initial take profit, where I lock in 75% one time right here. And then after that point, I've got 25% of my shares left. Oh, let's move that up. Got 25% of my shares left. So then I'm going to look for things like 5 candle series, like right here. We just invalidated it. Did we? I don't think we did. Sorry, I lied. It's 1106. Oh yeah, 1105. All right, so right here would have been the second lock profit. So that's another 75% sold. Okay, so sorry. So I'm in, stop loss identified, targets identified, my initial take profit. Then I'm looking for a 5 candle series like we just had to lock another 75%. And then when we get a pullback and then a push, okay, that's when I look to move the complete stop, the 100% stop loss up, okay? Now you can always lock profits manually anytime you want. Like if you see a big fat candle like this, you can always just lock that profit. It's not a big deal. It's easy, right? You can always do that. But if you want to really capture and squeeze, I don't want to say like optimize profits and stuff, because a lot of that can just be FOMO. So don't fall into that trap of like, I'm going to get every single penny out of this, because it's never going to happen. So don't hurt yourself trying. But if you are someone that struggles with cutting your profits too early, this kind of strategy, this mechanical trading, is where it's at, because this will keep you out of your own, out of your own way, basically. So I don't want to see you guys getting hurt. I don't want to see anybody stressing out or beating themselves up if they make quote unquote bad decisions. You're just a human and you don't know how to program yourself yet. So that's why I'm here. So again, just to very quickly recap, one entry strategy of many. There can be thousands of them out there. You can use Stocks Buddy, you can use Beacon, you can use EMA cross-ups, you can use Parabolic SAR. It doesn't matter, right? Obviously, the ones that I make kind of emphasize the risk management, and they keep those as small as possible and defined. But it doesn't matter. You know, you've got your entry, you've got a defined risk range, you've got some disproportionate take profit, you've got a set of rules for locking in the bulk of your profit to guarantee net profit overall. So there's one here with the 5 candle rule, and then your hard stop for the like just whatever's left. Okay, and that's all you got to do. That's all I do when I trade charts, is I just let the chart tell me what to do. Now it's not always a strategy. Obviously, there's all kinds of strategies that I like, but that's the same idea though. I'm just looking for the same core concepts: an entry, tight risk, some sort of take profit mechanism for the bulk of my position, and then a hard stop mechanism. Okay, so I'll stop rambling because it's been another 25 minutes. And I'll see you guys next time. Thank you all for watching, and hopefully this makes sense when it comes to take profit. Let me just put this on the screen again just so you guys can see it. So this is always going to be old faithful for me, right? Lock 75% one time at a predetermined level. Number 2, you're just catching these in the wild. They happen or they don't. If you catch them, they're great. If not, it's okay. You're still just locking 75% of what's left, whatever's left. And then this one is always going to be your holy grail, right? This is what makes the whole thing work, is respecting your stop loss and keeping everything tight. And it makes sense because once you get a validated low, that shows that bearish strength came in, bullish strength came out, that level should hold. If it doesn't and price goes down here, you want to get out. At least I do. Unless I'm planning to build in and all that good stuff. We'll talk about that later. All right, I'm done rambling. It's officially over the 25-minute mark, so I'll catch you guys later. Thank you all for watching, and I hope you have a good day.